So much to discuss. I'm really excited. All right, half year 2024, and the NGX, that's the stock exchange, has returned over 33% so far. It's 33.8 as at closing of trading yesterday. So, what does the second half of the year hold in store for the market? What kind of headwinds like rising rates for treasury bills and bonds are in store for investors? We're going to be getting into that in just a moment. And looking at the dividend yield for a number of stocks. Well, just 5 of them. All right, so speaking of which, Nairametrics put those figures together. As far as using the dates for this so far this year, Smart Products, 40%. SFS REIT, which is Real Estate Investment Trust, 14.3. Zenith Bank is in third place, 12. UBA, fourth. And Presco, we're just talking about Edo State 2 seconds ago. That's in fifth place. On the fixed income side of things, the latest retail savings bond in Nigeria for the July window has lower rates than June. The 2-year bond, 16.66%, and the 3-year, 17.6%. And those are down from, 17.4%? And 18.41 respectively. All right, Nigeria's total capital importation rose by 210% in the first quarter of 2024 from 1.08 billion in the other quarter of 2023. And basically 198% year on year. You're seeing the figures there. Foreign portfolio investment, foreign direct investment. The UK was the #1 source. Lagos pretty much eating up everything, and the banking sector as well. So we'll get into that too. There's so much. This is a data deluge. Financial advocacy nonprofit think tank Budget Nigeria has put together a study of the capacity of the 36 states to pay a higher minimum wage than what's being paid now, 30,000. There's the tweet. They said, hello Nigerian. Still on Nigeria's minimum wage, palava, which is a colloquial term for trouble. Here is an analysis of states' revenue capacity, wage bill, and fiscal imbalance. We're going to get into all of that. Will we have enough time? Praise Ihansekhien is with us. She's the head of investment research at Meristem Securities. Praise, good morning to you.
Good morning, Reuters.
Thanks for joining us. I see you're in your patriotic green.
I mean.
Fantastic. All right, where do we begin? All right, look, you know what? Let's start with the states and this minimum wage matter. We're going to put up personnel costs, Praise, right, on the screen for our viewers. Now, this is what, about 11 or 12 states. We can put all 36. But Praise, all these states you're seeing in front of you, 30% of their revenues are going to personnel costs. Look at Kano, is at the top at 40%. Now, this is 2021 data, and who knows? 2023, excuse me. Now, if this much of your revenue is going to the current wage cost without even raising minimum wage, how can they? What are your thoughts? I want to hear your thoughts on these numbers.
So first things first, we need to look at it from the revenue angle.
Okay.
Right. Most of the states in Nigeria, about a significant portion of their revenue comes from federal FAC allocation.
Right.
So what they get from the federal and not really from their internally generated revenue. So on looking at the fact that, FAC allocation is what mostly holds the states, like top of the states that you mentioned, FAC allocation is what holding them. Save for Lagos and a few other states that actually has, substantial internally generated revenue. Most of the states in Nigeria are being held together by the federal government. Yeah. So if that is already a significant portion of their revenue, then putting the personnel cost, which also is the major part of recurrent expenditure for Nigeria. If you look at almost all the states, even Nigeria as a country, the recurrent expenditure as opposed to capital expenditure is the significant part of expenditure. Right. And then in that recurrent expenditure, personnel cost is the most times the most significant of even Nigeria's budget, not talk of the state itself. Right. So having that breakdown already gives you an understanding of these percentages you're seeing, these numbers you're seeing in terms of revenue, personnel cost as a percent of revenue. And I mean, we are where we are currently. The likelihood is that we are going to see these numbers increase significantly, when the wage bills are increased. Right. But also remember that FAC is given that FAC is their major source of revenue. Okay. With FAC is expected to increase going forward with the fact that they're no longer paying substantial fuel subsidy and payments. Federal government is no longer paying that. So FAC, in fact, so far this year, FAC has been higher than what we saw in 2023. Yeah. So the expectation is that FAC is going to increase, and with that, states should be able to see more revenue from FAC, and then they should be able to pay some.
So oil prices are subsidizing higher minimum wage. That's what's going to happen.
Exactly. So in a way,
I have a productivity question for you, right? And this is another. Budget. They do such good work. Shout out to Budget. Let's put up. I think this is going to be personnel costs per employee, right? I love this. You're from Edo State, right? Yes, you are. Shout out to Edo State. No, look at these numbers, and just for our viewers. So your first column is your actual personnel cost. The second column is the number of personnel on state payroll. Edo State has the second lowest personnel payroll. I think Ebonyi is like 12,000. Again, the chart was too big. We couldn't put all 36 states in there. But Praise, is there something to be said? By the way, look at Lagos, 69,000. By the way, Kano State, that's number one, has 84,000 people on its payroll. I know Kano State is a big state. But so here's my thing for you. We talk a lot about productivity, right? Can you do more with less? And again, Edo State has announced 70,000, by the way. So they are paying more and they have a smaller payroll. But my question to you is, can you do more with less? And is the flip side of that having to fire people and adding to unemployment?
Productivity, I mean, it's a major conversation in Nigeria, given that we don't produce as much as, we're not really a producing state, we're not a producing country as much.
Right.
So for any country, your labor statistics determine the kind of growth that you can experience. On the other hand, if you don't have that kind of growth, productivity play, and you are increasing income, what you're going to have happen is that significant increase in inflation, because productivity, the supply is not going to be matching the demand.
Exactly.
So that's where, we need to, there's no two way about it. Productivity needs to go up significantly in Nigeria for us to be able to see significant improvement on all the economic factors that we're talking about. So at this point, it's a play that needs to be fixed.
Nobody, well, besides us, because we've looked at this stuff and we've talked about it, and that's why we have you here.
Yeah.
There doesn't seem to be enough of a conversation around the fact that, as you've just said, if you raise incomes, there's going to be an inflationary impact on there.
There is.
All right, another nice little chart we've had. I think this is a fiscal imbalance, right? This number is, just looking at it, if you add up Lagos, again, we couldn't add everybody up, but this is just the top one. What's that? Top 5.
Yeah.
This is okay for our viewers. This is state revenue as a percentage of the cumulative revenue of the 36 states. So how much of the revenue of that state takes up the entire pie? So basically, Lagos revenue is 15% of the entire revenue of all the states. If you add up Lagos, Delta, Rivers, Akwa Ibom, and Bayelsa, these 5 states, make up 41% of the entire revenue of all the states for 2023.
Very interesting.
So are you going to say FAC again? How do you pay for this when you have this kind of fiscal imbalance?
Interestingly, these 5 states are the highest, that they get the highest allocation to FAC, but they also make the highest internally generated revenue.
Right.
So I think that's where their high numbers are coming from. And of course, there's a significant wide gap between how much they're making and how much is needed to actually meet the needs of recurrent expenditure. That's why you still see debt is significantly high, because
excluding loans, right?
That's excluding loans. So you still see that there's still a need to continually raise debt to be able to meet all the recurrent needs and, of course, fund some capital expenditure. But one thing about Nigeria is we are not really big on capital expenditure in Nigeria. However, that's where we should be looking at to be able to create sustainable revenue that would continue to fund, expenditure going forward. There's a lot of fiscal imbalance in Nigeria in terms of the revenue and the expenditure base, and that's why there's the debt burden is so high because we have that imbalance, and something needs to feed that imbalance. We call it the rest of the world. The rest of the world feeds the imbalance between what you're making and what you have to spend. So what we are indebted to the rest of the world, I mean, it's going to continue to.
I like that. I think more pressure needs to be put on the governors.
Yes,
we got to really put a focus on the government. I could talk about minimum wage and the state study for the rest of the segment, but we got to get to other items. In fact, following up on that, capital importation, right? And I do want to let's put up the numbers for the capital importation, because this is a follow-up on the numbers we saw on the fiscal imbalance. And I want to get your thoughts on that. What do you make of, look at this appraise. I mean, this is not new. Lagos historically eats up all the money. But Lagos, out of 3.37 billion that came in, Lagos 2.7 billion, only FCT and Ekiti State, only 3 states had any capital. I need to hear your thoughts on this. The rest of the states are not attractive for capital?
So I was going to say, foreign inflow is a value play. Foreign investors will not come where they don't see value. And where they don't see attractive returns. Lagos has positioned itself as come and you get value from Lagos. So it's not surprising, to be honest. Numbers are not surprising to see that you get 82% from Lagos. There's also the fact that maybe in Q1 there was less to other states. You have some other quarters where some other states are able to generate revenue more. Right. I mean, in foreign inflows, some other states are able to attract foreign inflows, and then maybe Lagos numbers will be less. But this time around, we just have 3 states, so it's not surprising that you have that kind of number, and it's a value play where foreign investors don't see value, they're not going to go there. You have a lot of states in Nigeria where tourism can be built.
Like Uyo. Hey, shout out to Akwa Ibom.
Shout out to Akwa Ibom. So tourism can be built. Some manufacturing sectors can be developed, and all those things. And then, unfortunately, you have the insecurity factor that investors are definitely going to play into whatever business they are investing in. So putting all these things together, it's not shocking to see that some states don't have significant foreign inflows coming into them. All these problems need to be tackled in terms of us even seeing investments in tourism, in manufacturing sectors, and of course, significant improvement on the security situation of Nigeria for us to be able to see improvement in foreign inflows in the country.
Thank you for that. Any other general views on the capital importation number? It was mostly FPI, right?
Yes,
that came in.
It's not shocking because rates on the money market instruments were significantly high in Q1, and that was where the bulk of the what held the entire Q1 FPI inflows was money market instruments.
Right.
Shock. And one interesting thing is throughout 2023, we made about $3.7 billion throughout 2023. Wow. And in Q1 this year, we've already made 3.3. Right. So that goes to show that we should expect for the rest of the year, capital importation for 2024 is going to be significantly higher than what we had in the entire 2023.
Well, that's encouraging. Let's move to the equity market now, the NGX. So far, 33.3 returns, year-to-date return. Got some good dividend yield figures. Nairametrics put some figures up. What's your view for the second half of this year? And I'm sure you will mention the fact that money markets rates going up is probably a headwind for equities. But what's your view on the equities markets second half of the year?
The interesting thing is that rates have somewhat peaked. At the fixed income money market rates.
Right.
I know you at the opening speech, you mentioned the fact that the savings rates, bond rates were Yes. So looking at rates in the fixed income market for bonds, for OMO bills, for treasury bills, and all this other fixed income investments, it's quite clear that the central and the DMO and the CBN, they are kind of aligned on the fact that they've gotten to a comfort level when it comes to rates. So we don't expect rates in the fixed income market to increase significantly in H2. Given that background, is also, it's kind of a positive for the equities market, because while the rates are still attractive, don't get me wrong. The fixed income rates are still attractive, so they will still see significant inflows in the fixed income market. But then the fact that we're not expecting that increase to happen would lead some investors that are looking for beyond these fixed income rates to come to the equities market. But still, equities market is not likely to be as bubbling. I want to use the word bubbling as it was as H2 2024, when we just had a new government coming and everybody was excited and everybody was just buying and buying. We're at the point where one thing about the equities market is always correct itself. So those significant gains that we had from May to even January this year, they've begun to moderate, and then valuation of companies is now what's telling. And then investors are now looking at what is the actual value of this company I'm about to invest in. And there's so much happening in the equities market. Companies are doing rights issue. All these things are going to play into what's going to happen in the equities market in the H2.
I've noticed you said value twice now. Value for the states or an investor coming in. What value do I get from the states? And also value from an investor. What value am I getting from these companies I'm investing in? So you mentioned fixed income. The retail bond, do you ever tell anybody to buy those things as well?
Of course. Depends on the investors. You have investors that have a particular outlook. Say, for instance, you have an investor that is trying to plan for retirement and he wants to get a particular amount of money maybe stagger is coupon for every 3 months or every 6 months, and then the person invests in a 2-year savings bond for this month, and then so you have investors like that are planning for maybe the next 3 years, next 4 years, we have investors that we recommend the savings bond too, but it just depends on the investors' interest, the horizon, and what they're looking out for.
So I guess, I think we'll hear from you guys again. You have an outlook for I guess the second half of the year. So putting all that together, what's the investing landscape look like to you for
It's getting
H2?
very interesting.
Very interesting.
It's getting very interesting. This is an exciting time to be in the market. Very exciting.
Whether it's equities or fixed income,
watch out and see.
You are preaching to the choir. Invest, ladies and gentlemen.
Invest.
Praise. It's always great to have you on the show.
Thank you so much.
Always enjoy getting your insights. You guys are doing great work at Meristem. Praise Ihansekhien, who of course head of investment research at Meristem Securities. Thank you so much for your time.